All right, so today we're going to do a deep dive into uh, financeable things.
Mm-hmm.
You know, like that thing that makes investors just throw their money at an idea.
Right.
And trust me, you're probably already kind of curious about this, even if like
Yeah.
the word itself doesn't exactly like scream excitement or anything.
Well, think about it this way.
Yeah.
Understanding what makes something financeable.
Okay.
It's like having a superpower.
Oh.
You'll be able to look at any project, your
Right.
friend's startup,
Yeah.
a potential real estate investment, even a cool crowdfunding campaign, and you'll see its potential through the eyes of someone
Okay.
with the money to invest.
Okay. I like that.
Right.
That's a much more compelling way to look at it for sure.
Yeah.
And that's exactly what we're aiming for today, right?
Yeah.
To give our listener the knowledge.
Give them the tools.
Yeah. To decode this whole like financial mystery.
We've got a stack of sources here,
Yes, we do.
and we're going to extract those golden nuggets of knowledge.
Oh, yeah.
That'll make you feel like a financial wizard by the end of this.
I love it.
In no time. Right.
Yes. Let's get started then.
Let's get into it.
One thing that pops up constantly in our sources is strong cash flow.
Of course.
Seems pretty obvious. Investors want a return on their investment.
It's the bottom line.
Yeah, but is that the whole story?
Right.
Is it really just about being a money-making machine?
Well, consistent cash flow is definitely the lifeblood
Okay.
of any financeable venture.
Right.
It's what allows businesses to repay loans,
Mm,
distribute profits, and keep growing.
sure.
But it's not just about the raw numbers. It's about the story those numbers tell.
What kind of story are we talking about?
Investors want to see a trajectory
Mhm.
of growth.
Hmm.
They want to be reassured that the business model is sound and that the cash flow is sustainable in the long term.
So a one-hit wonder wouldn't be that appealing,
Right.
even if it made a ton of money initially.
Not really. Investors are looking for stability and predictability.
Makes sense.
They want to see that the cash flow is consistent and reliable,
Uh-huh.
not just a flash in the pan.
Makes sense.
Yeah.
Another key factor our sources highlight is low risk, which, let's be honest,
Okay.
sounds a little unrealistic
Yeah.
in the real world.
There's always a little bit of risk.
Right. No investment is completely risk-free.
Never completely risk-free.
So what does low risk really mean in this context?
You're right. It's not about eliminating risk altogether.
Yeah.
It's about managing it effectively. Think of it like this.
Okay.
Investors are basically assessing the probability of success
Okay.
versus the potential downside.
So it's more about calculated risk than zero risk.
Precisely.
Okay.
And here's a key takeaway for you.
All right.
There are strategies to make any project more attractive
Oh.
by mitigating risk.
How?
For example, think about insurance.
Okay.
Having comprehensive insurance coverage can significantly reduce the financial impact
Right.
of unexpected events,
Yeah.
making a project much more appealing to investors.
So you're basically safeguarding them
I was
against potential downsides.
You're managing the risk.
Okay.
Yeah.
Strong cash flow, manageable risk. Got it.
Mm-hmm.
Now, our sources dive into some real-world examples of
Yeah.
financeable things.
Sure.
We've got real estate startups, tech ventures.
Yeah.
Which of these are you most excited about right now?
What I find particularly interesting at the moment
Yeah.
is the intersection of real
Ah.
estate and technology.
Oh, interesting.
Yeah, we're seeing startups developing innovative solutions
Okay.
for property management, sustainable building practices, and even virtual reality experiences
Oh, wow.
for real estate browsing.
Wow.
Yeah.
So even within a seemingly traditional field like real estate, there's this whole layer of tech-driven innovation
Right.
that's creating these exciting new opportunities for investment.
Exactly. And this is why understanding financeability
How does-
is so powerful.
Interesting.
It allows you to spot those emerging trends,
Okay.
those areas where innovation is meeting market demand
Yeah.
and creating the potential for significant returns.
So you're not just like chasing the current hot thing. You're
Yeah.
kind of like,
You're looking ahead.
anticipating what's going to be the next big thing.
Absolutely.
Okay, I like that.
Yeah.
Here's where it gets really interesting for me.
Okay.
Let's say our listener has this brilliant idea.
Right.
Maybe the next killer app or a game-changing gadget. How do they actually make it more financeable?
Okay.
What are the concrete steps they
Fair.
can take?
Our sources provide a roadmap.
Okay.
And the first step is creating
Yeah.
a rock-solid financial plan.
Okay, so it's not just about having a good idea.
No.
It's about convincing others.
It's about the business.
Yeah, that it's a good business.
Absolutely.
Okay.
And that's where a well-crafted financial plan becomes your most powerful tool.
Interesting.
Yeah.
So step one.
Step one, solid plan.
Killer financial plan.
Yes.
What else can our listener do
Right.
to boost that financeability factor?
Providing collateral
Okay.
is another important aspect, especially for debt financing, like getting a loan.
Right.
Collateral is essentially an asset
Uh-huh.
that you pledge as security for the loan.
Okay.
This reduces the lender's risk, as they have something tangible to recoup
Right.
some of their money should the venture fail.
So let's say I'm starting a food truck business.
Okay.
And I need a loan to buy the truck itself.
Right.
The truck would then be considered collateral.
Exactly.
Okay.
And that gives the lender more confidence in providing the loan, as they know they have a way to recover some of their investment if your business doesn't take off as planned.
Now, our sources also mention the importance of creditworthiness. So does our personal financial track record matter
Absolutely.
when we're trying to make something else financeable?
Having a good credit history,
Okay.
whether for yourself or your business, is essential.
Interesting.
Lenders and investors want to see a responsible track record of managing finances.
Right.
This builds trust and signals that you're reliable
Yeah.
when it comes to handling money.
But is a good credit history always enough?
That's a great question.
What if someone has a fantastic idea,
Right.
but maybe their credit score isn't perfect?
Okay.
Are there ways to overcome that?
While a strong credit score
Uh-huh.
is certainly an advantage,
Right.
there are other ways
Okay.
to demonstrate financial responsibility.
Like what?
For instance, having a well-structured business plan,
Oh.
offering a compelling equity stake, or securing partnerships with established businesses
Okay.
can all help mitigate concerns about credit history.
So it's about presenting a holistic picture
Exactly.
of financial stability
It's about building a strong case.
and showing that you're serious
That goes beyond just your personal credit score.
about making the venture succeed.
Encompasses the overall
Yes.
financial health and potential of the project.
Okay. We've got a solid financial plan,
Right.
collateral if needed,
Mm-hmm.
and a decent credit history.
Sure.
Or at least a plan to address any concerns.
Right.
Anything else we can do
Remember when we talked about managing risk?
to make our idea just irresistible
That's where things get really interesting.
to those with the deep pockets.
Investors and lenders get nervous when they see a lot of potential downsides.
Okay, so how do we calm their nerves?
Right.
What are some tangible strategies to reduce that risk?
We mentioned insurance earlier.
Yeah.
And that's a great starting point.
Uh-huh.
But there are other strategies too.
Yeah.
Let's say you're launching a new product line,
Right.
diversifying your offerings,
Okay.
having multiple products instead of relying on just one can mitigate the risk of a single product failing.
Okay, so you're not putting all your eggs
Don't put all your eggs in one basket.
in one basket.
Right.
Got it.
Or if you're concerned about potential market fluctuations,
Okay.
hedging strategies can help protect your investment.
Hedging strategies, okay, starting to feel like I'm speaking a different language here.
Yeah.
But it sounds like the key takeaway
That's all I've asked.
is that actively addressing potential risks,
Being proactive.
yet ignoring them,
Yeah, not burying your head in the sand.
is crucial for attracting investment.
Exactly. Investors are more likely to put their money
Makes sense.
behind a project when they see that the entrepreneur has thoughtfully considered
Okay.
and planned for potential challenges.
Now, there's one more point in our sources that I really want to unpack.
All right, let's hear it.
Showing market demand. How do we prove that people actually want
Right.
what we're offering?
Good question.
It's one thing to believe in your idea,
You got to show them
but how do you convince others
that there's a market.
that there's a market out there
Yeah.
that's hungry for it?
That's a crucial point.
Yeah.
It's not enough to say everyone will want this.
Right.
You need to provide evidence.
Evidence, not just enthusiasm.
Not just enthusiasm.
Right.
And there are several ways to do that.
Give me a concrete example.
Okay.
Let's say I'm developing a revolutionary new, a self-folding laundry basket.
A self-folding laundry basket.
A genius, right?
Love it.
How do I show there's demand for that?
Okay, in your case,
Okay.
market research would be a great starting point.
Okay.
Imagine conducting surveys, focus groups, or even analyzing online conversations.
Okay.
People venting about their laundry struggles,
Right.
wishing for a magic solution.
So those frustrated tweets about overflowing laundry baskets,
Tapping into
that's actually valuable market data.
real-world consumer sentiment
Wow.
and demonstrating that a need exists for a product like yours.
Or let's say you're developing an app.
Sure,
Early user engagement
early user engagement
is a fantastic indicator of market demand.
is key.
If you can show that people are downloading your app,
Right.
using it regularly, and providing positive feedback,
Exactly.
that speaks volumes.
That speaks volumes to investors.
So it's not just about saying,
It's about data.
this is amazing.
It's about proof.
It's about showing proof
Yeah.
that people are already interested,
Right.
or that there's a clear gap in the market
Or a gap.
that your idea fills.
You nailed it. Investors are looking for evidence,
Okay.
not just excitement.
All right, we've covered a lot of ground here.
Yeah, we have.
From understanding what makes something financeable
Right.
to actionable tips on boosting that financeability factor,
We did it.
it's clear that it's about more
It's more than just a good idea.
than just a good idea.
Yeah,
It's about presenting a compelling case
absolutely.
that convinces others of its financial viability and potential for return.
And that case needs to be built on solid ground.
Okay.
Market research, a strong financial plan, risk mitigation strategies. It all adds up
To paint a picture
to paint a picture of a project that's not just exciting,
of project.
but also financially sound.
Okay, now that we understand the fundamentals,
All right.
let's explore how this plays out
Yeah.
in the real world.
Let's do it.
Up next, we'll dive in some fascinating examples
Okay.
of financeable ventures across different sectors
Looking forward to it.
and see what makes them so attractive to investors.
Stay tuned because things are about to get really interesting.
I like it. Welcome back. So far, we've established the ground rules
Mm-hmm.
of financeability, strong cash flow, manageable risk,
Yeah.
a killer financial plan.
Gotta have it.
But our sources also dive into different types of financing.
Oh,
We've
they-
touched on loans and traditional investments.
Right.
But what are some other ways to get funding
What's a jungle out there?
for a financeable project?
With a financing option for practically every type of project. One that's become incredibly popular,
Okay.
especially for creative projects and startups,
Yeah.
is crowdfunding.
Ah, yes. Crowdfunding, the power of the people.
The power of the people.
But how does it actually work?
Right.
Is it really as simple as just posting your idea online and watching the money roll in?
It's a bit more nuanced than that.
Okay.
But the core idea is brilliant.
Okay.
Individuals contribute small amounts of money to projects they believe in.
Okay.
And this has been a game changer,
I can see that.
especially for those who don't fit the traditional mold
Right.
for bank loans or venture capital.
So what kinds of projects thrive in the crowdfunding world? Give me some examples.
Think independent films, innovative gadgets,
Okay.
community initiatives, things that capture people's imaginations and inspire them to become part of something bigger.
That makes sense. Our sources also mention grants. Aren't those usually for nonprofits?
Well, grants are traditionally
Then for-profit businesses get in on that action.
associated with nonprofits.
Okay.
There are actually quite a few grant opportunities
Oh, really?
for for-profit companies, especially those pushing the boundaries
Okay.
in research and development
Okay.
or working on projects with a strong social impact.
So if you're developing, say, a revolutionary new
Right.
solar panel technology
Exactly.
or a device that helps people with disabilities,
Right.
there might be grant funding available
There could be.
to help bring that to life.
And the beauty of grants
Okay.
is that they offer non-dilutive funding,
Non-dilutive funding.
meaning you don't have to give up equity in your company
Okay.
in exchange for the money.
So you retain ownership
You retain ownership.
of your company.
It's essentially free money to fuel your project.
Free money always sounds good.
Sounds pretty good, right?
Yeah.
Now, our sources mention these massive
Right.
infrastructure projects, things like highways
Yeah.
and renewable energy developments.
Sure.
Those must require some serious financing.
Huge.
How do they even get funded?
That's where project financing comes in.
Project finance.
It's a specialized form of financing
Right.
tailored to these large-scale projects
Mhm.
where the funding is secured based on the future revenue streams
Okay.
generated by the project itself.
So it's kind of like a bet
Yeah.
on the project's ability to generate income
It is a bet on the future.
once it's up and running.
Absolutely.
But that sounds incredibly risky.
It is high stakes.
What if the project doesn't perform
Right.
as well as expected?
And that's why rigorous due diligence is crucial.
Okay.
and project financing. Lenders and investors meticulously assess
Right.
the project's feasibility,
Right.
its revenue projections, and all the potential risks involved.
So you got to be really sure
It's not for the faint of heart.
that it's going to succeed. Yeah.
Got it. Okay, so we've got crowdfunding for the dreamers and innovators grants for those pushing boundaries, making a difference, and project financing.
The big leagues.
For the heavy hitters building the world around us.
Yeah. Building the world.
It seems like there are many paths
There are many paths.
to financeability,
Absolutely.
each with its own set of rules and opportunities.
That's what makes this whole topic so fascinating.
Yeah.
It's not one size fits all.
Okay.
It's about understanding the landscape, knowing your options, and finding the right financing strategy that aligns with your specific project and goals.
So, dear listener, whether you're thinking about investing in a friend's startup, backing a crowdfunding campaign, or maybe even dreaming up your own world-changing venture, remember that there are many ways to participate.
Lots of ways to get involved.
And the world of finance.
Absolutely.
Don't be afraid to think outside the box.
Don't be afraid.
The most groundbreaking projects
Think different.
often require creative financing solutions.
Creative solutions.
Speaking of creative solutions, I think it's time we tackled something that's often overlooked in the excitement
What's that?
of chasing funding due diligence.
Due diligence.
The not so glamorous,
Not so glamorous,
but absolutely crucial part
but so important.
of responsible investing.
The less exciting part, but very necessary.
It doesn't sound as exciting as pitching a billion-dollar idea.
Right.
But why is it so important?
Think of it like this.
Okay.
You wouldn't buy a house without having it inspected, right?
Right.
Due diligence is essentially the inspection process for investments.
Interesting.
It's about thoroughly investigating
Okay.
and evaluating an opportunity before committing any funds.
So it's about peeling back the layers.
Peeling back the layers.
And making sure everything
Making sure
is as good as it seems on the surface.
it's what it appears to be.
What are some key things to look for
Right.
when doing due diligence?
First and foremost, you need to scrutinize the financial plan.
Okay.
Does it make sense? Are the revenue projections realistic,
Right.
or are they just pie-in-the-sky hopes and dreams?
So it's not enough to have a bunch of numbers on a spreadsheet.
Right.
You need to understand the story.
You need to look deeper.
Those numbers are telling
The assumptions.
the assumptions they're based on.
Yeah. Are they realistic?
And whether they hold up under scrutiny.
Exactly. You also need to take a close look
Okay.
at the team behind the project.
The team. Okay.
Do they have the experience and expertise to execute their plan? What's their track record?
Right.
Have they demonstrated success in the past?
Okay.
Or are they all talk and no action?
So past performance can be an indicator
It can be,
of future success.
or at least a red flag,
Or at least a red flag.
if there's a pattern of failed ventures.
But what if it's a brand new team with no prior track record?
Right.
How do you assess their potential?
That's where things get really interesting.
Okay.
You have to delve into their backgrounds,
All right.
their skills,
Wow.
their passion for the project. Look for evidence of their commitment, their resourcefulness,
Okay.
their ability to adapt and overcome challenges.
So it's about looking beyond the resume
Yeah.
and assessing their character, their drive,
It's a drive.
their hunger to succeed.
Their hunger, their passion.
What else should we be looking for?
Don't forget about market demand.
During the due diligence process?
We talked about this earlier.
Market demand. Okay.
But it's worth repeating.
Right.
You need to see proof
Okay.
that there's a real need for the product or service
Right.
being offered.
And how do you go beyond just gut feeling
Gut feeling.
or anecdotal evidence?
You need data.
Are there ways to quantify market demand?
Absolutely.
Okay.
Market research is your best friend here.
All right.
Surveys, focus groups, competitor analysis. These tools can help you gauge consumer interest,
Okay.
identify your target audience,
Right.
and assess the size and potential of the market.
So before you even think about writing a check,
Do your homework.
you need to do your homework,
Mhm.
understand the financials, assess the team,
Right.
validate the market demand.
It's all part of the process.
It's all part of the due diligence puzzle.
Due diligence is key.
But what about the bigger picture?
Okay.
How does the concept of financeability
Right.
connect to the overall health
Interesting question.
and direction of the economy?
That's a fantastic question.
Yeah.
And it leads us into some really interesting territory.
Okay.
Stay tuned.
All right.
Because up next, we're going to explore how the things that get funded
Okay.
are often a reflection of the prevailing economic winds.
Interesting.
And what those trends might mean
Okay.
for your own financial decisions.
Welcome back. We've covered a lot of ground in this deep dive.
We have
Exploring everything from cash flow to collateral to crowdfunding.
the whole gamut.
But one thing that's been swirling around in my head is how this all connects to the bigger economic picture.
Right.
Does what's financeable change with the times?
That's a fantastic observation.
Yeah.
And it speaks to a really crucial point.
Okay.
The things that investors are excited about, the projects that get funded,
Right.
they're often a reflection of what's happening in the economy as a whole.
So it's not just about having a great idea.
It's about timing.
It's about having a great idea at the right time.
Exactly.
When economic winds are blowing in your favor.
Think about it like surfing.
Surfing, okay.
You need the right wave
Yeah.
to catch the right economic conditions
Okay.
to propel your project forward.
So you need to ride that wave.
Ride the wave.
I got it.
And those waves are constantly changing,
Right.
influenced by things like interest rates,
Okay.
inflation, consumer confidence, and global events.
So many factors.
Lots of factors.
Yeah. All right, let's break that down a bit.
Okay.
How do these economic factors actually impact what gets funded?
Sure.
Give me an example.
Let's say interest rates are on the rise,
Okay.
which makes borrowing money more expensive.
Right.
Suddenly, those big infrastructure projects we talked about earlier.
The highways.
Highways, exactly.
It's a big one.
The ones that rely heavily on debt financing
Right.
might become less appealing to investors.
So even if the project itself is solid, the changing economic tides can make it harder
It can.
get the funding.
Investors get more cautious.
Needed to get it off the ground.
When the cost of borrowing goes up,
Right.
they might shy away from projects with massive upfront costs
Okay.
and long repayment timelines, especially if there's a perception that the economy might be headed for a downturn.
On the flip side, are there any types of projects or industries that actually benefit
That's a great question.
from economic uncertainty?
Absolutely.
Are there things that become more financeable
Think about those.
when times get tough?
Essential goods and services that people rely on,
Okay.
no matter what's happening in the economy.
Like the essentials.
Food, healthcare, utilities.
Okay.
Those industries tend to weather economic storms pretty well.
So investing in a company that makes toothpaste or toilet paper might be a safer bet during a recession
Exactly.
than, say, investing in a luxury travel company.
That's a great example.
Okay, I get it.
And another area that often sees increased investment during tough times
Okay.
is anything related to cost saving
Interesting.
or efficiency. When businesses are tightening their belts,
Right. Everyone's trying to save money.
they're more likely to invest in solutions that help them streamline operations,
Okay.
reduce waste, and boost their bottom line.
So it's all about recognizing those economic trends
Right.
and figuring out where the opportunities lie.
Yeah, you got to be able to spot those opportunities.
Yeah. Within those shifts.
Absolutely.
But how can, everyday investors, people like our listener, keep their finger on the pulse of the economy?
It can feel overwhelming.
It seems like a lot to keep track of.
But there are some simple strategies.
Okay.
Paying attention to financial news.
Right.
Reading economic forecasts from reputable sources.
Okay.
And even just having conversations with people in different industries.
Right, getting different perspectives.
Can give you valuable insight
Into how the economy is performing
Exactly.
and where it might be headed.
You get a sense of the trends.
So staying informed is key.
Staying informed is key.
But beyond just understanding the trends, what can our listener do to make their own ideas more financeable?
Sure.
Especially in light of these economic shifts.
It all comes back to crafting a compelling narrative.
A compelling narrative, okay.
You need to be able to connect your idea to the bigger picture.
Right.
And show why it's relevant. And potentially profitable.
Right.
In the current economic climate.
So if you're pitching a new energy-efficient technology during a time when energy costs are soaring...
Perfect example.
That's a pretty strong alignment.
That's a strong alignment.
With the current economic reality.
You're not just presenting a solution.
You're solving a problem.
You're positioning it as a timely and valuable response to a pressing economic concern.
That's a powerful story to tell.
It is.
Wow, this has been an incredible deep dive
It has.
into the world of financeability.
You covered a lot.
We started with the basic principles, explored different financing options, talked about the importance of due diligence.
Absolutely crucial.
And now we've connected it all.
We tied it all together.
To the dynamic forces of the economy.
The ever-changing economy.
It's been a true pleasure exploring these ideas with you.
Likewise, the pleasure was all mine.
I always find it fascinating how finance intersects.
It touches everything.
With so many different aspects of our lives. And shapes the world around us.
It's the invisible hand.
And for our listener, I hope this deep dive
I hope so too.
has provided not just knowledge, but also a sense of empowerment.
A sense of possibility.
The world is full of incredible ideas.
It is.
Waiting to be discovered.
So many ideas out there.
Nurtured and, yes, financed.
Just waiting for the right opportunity.
So keep those financeability muscles flexed.
Keep learning. Keep growing.
Stay curious and never be afraid to chase your dreams.
Chase those dreams.
Until next time, keep diving deep